It's no secret that health insurance of any kind can be confusing, but we are licensed brokers who have helped thousands of people understand health insurance, and today we're going to do that for you. Let's dive into the basics of health insurance. Let's get started with the most basic term in health insurance, premium. A premium is simply what you pay for your health insurance. In most cases, this is a monthly bill, but sometimes you can pay it quarterly or yearly. If you simply pay your premium each month, your health insurance will stay in force. If you don't pay your premium for an extended period of time, your health insurance company will in most cases have the right to drop you. The next term we're going to talk about is a copay. A copay is a payment you make at a healthcare facility at the point of service. We'll talk about a bunch of other out-of-pocket expenses later in this video, but this is the simplest one. If you go to your local doctor's office, maybe you have a $10 or $20 copay. If you go to a specialist's office, maybe it's a $30 or $50 copay, and so on and so forth. Copays are a set payment you have to make for a specific healthcare service. You can look through your policy summary of benefits to see what copays you should expect in each situation. A deductible is the amount of money you have to pay out of pocket until your insurance kicks in fully. For instance, let's say you've gotten a hospital bill that is $5,000, but your policy has a $2,000 deductible. That means you have to pay $2,000 and then the insurance company will start to help cover the rest. Deductibles vary greatly depending on the policy. In general, the higher your monthly premium, the lower your deductible will be, and vice versa. The next term we're going to talk about is coinsurance. Coinsurance is the percentage of out-of-pocket costs that you must pay in certain situations. In some health insurance policies, you first pay your deductible, then you have a coinsurance split with your insurance company. The splits could be 80-20, 70-30, or 60-40. In other policies, you have set coinsurance splits for certain healthcare procedures. You may have to pay 20% of the cost of durable medical equipment, which includes things like oxygen, or you may have a 25% coinsurance splits on one of your prescriptions. Just like the deductible, in general, the higher your monthly premium, the lower your coinsurance splits will be, and vice versa. If you have a low premium, you'll probably have higher coinsurance. The next term we're going to talk about is the out-of-pocket max. The out-of-pocket max is the amount of out-of-pocket costs you have to pay until your insurance company covers 100% of your bills going forward. Let's say your out-of-pocket max is $10,000. Once you pay $10,000 in copays, deductibles, and coinsurance, your health insurance company will cover everything else for the rest of the year. This is a great way to shield you from the truly catastrophic costs of healthcare. A major surgery or things like dialysis can cost tens of thousands of dollars a year, and this will shield you from having to pay $50,000 or $100,000 over the course of a year. You may have noticed that your health insurance plan has a series of letters on your card that say things like HMO, PPO, EPO, or HSA. These letters help you understand what type of health insurance policy you have. There are many types of policies, but we will dive into the four most common ones we see. HMO stands for Health Maintenance Organization. The biggest thing to know about an HMO is that they give you a network of providers you can see, and you can't see providers outside of the network unless it is an emergency situation. They can have relatively low copays and coinsurance, but the providers you can see may be limited. The next one is a PPO. PPO stands for Preferred Partner Organization. PPOs have slightly more options compared to HMOs. In a PPO, you are given a network of providers you can see in-network, but you are given the ability to see providers outside of the network, albeit at a higher cost in most cases. You are given a bit more flexibility, but that flexibility could cost you if you leave the network. We now talk about an HSA. HSA stands for Health Savings Account. HSAs are all the rage these days. An HSA is a savings account that has distinct tax advantages. You pair your HSA with a high deductible health insurance plan. Basically, you pay a low premium and have a high deductible health insurance plan. You take the money you saved on your lower premiums and put it into a tax deductible savings account. If you ever have a high medical bill, you pull money from your HSA. Many employers like these plans because they can contribute to your HSA, which helps you directly pay for your healthcare costs. And the final one we're going to talk about is an EPO. EPO stands for Exclusive Provider Organization. When HMOs got a bad rap for the tight network, they decided to rebrand in some areas as EPOs. Some EPOs offer two tiers of doctors, ones with lower costs and ones with higher costs, but you still must stay within the network in the same fashion as an HMO. Now that we're done with all the different types of health insurance plans you could run into, the next term we're going to talk about is a subsidy. When it comes to health insurance, a subsidy is an amount of money the government pays towards your monthly premium if you use a government-run marketplace. Websites like healthcare.gov or in our state getcovered.nj.gov allow individuals and families to get health insurance policies at a subsidized rate. In general, the lower your income, the more the government will give towards your monthly premiums. You simply put in all your information and the websites will show you what you should expect to pay for the different plans available in your area. Let's now talk about enrollment. There are many different enrollment periods in the health insurance space, so we're going to dive into the most common ones. The first one we'll talk about is open enrollment. Open enrollment is the period at the end of the year where you can look at individual and family health insurance plans for people between 19 to 64 and see if there are any plans that better suit your needs for the upcoming year. For healthcare.gov, you have from November 1st to January 31st each year. And the best part is there's no health questions. Simply choose the policy that's best for your health needs and budget, and you're good to go. Another term we're going to talk about is a special enrollment period. A special enrollment period is a catch-all term for when you have a major life event that allows you to switch health insurance policies. Some special enrollment periods include moving, having a baby, a disaster happening in your area, and more. There are dozens of different special enrollment periods and they vary depending on the type of health insurance you have and your location. For example, having a baby allows you to change your health insurance in New Jersey on the marketplace. But if you're on Medicare, having a baby doesn't affect anything. If you're about to have a major life event, look into if you need to change your health insurance and if you have the right to do so. We're also going to talk about Medicare annual enrollment. Medicare annual enrollment is similar to open enrollment, but it is only for people on Medicare. For starters, it is shorter compared to open enrollment. It takes place from October 15th to December 7th every calendar year. In most states, you're allowed to switch Medicare Advantage plans or prescription plans. You could also switch between Original Medicare and Medicare Advantage. Switching supplements in most states, however, does require health questions. We hope this video helps you better understand health insurance. It can be a bit confusing at first, but with a little guidance, it can be easy to understand. Let us know if there are any other topics you'd like us to cover, and if you're throwing up your hands and saying, I can't stand this, I don't know what's going on, feel free to reach out to us and we are happy to help you. Visit our website at www.njlifeandhealth.com or call 848-226-6897 to call our Toms River, New Jersey office. And don't let the NJ and NJ Life and Health fool you. We are licensed in over 20 states and we are happy to help you in most situations. And if you're someone who just likes videos like this and likes learning at your own pace, feel free to check out our YouTube channel. We have a ton of great educational content, so like, subscribe, check those out, and comment below if there's another topic you want us to cover. See you in the next video.